Hello guys, welcome back to our YouTube channel, and this is our trade recap. The trade we took on 2nd December. And first thing first, as always, is always market structure. In this strategy of ours, we use two time frame. You use the 1 hour time frame, then use the 15 minutes. So first thing first is always market structure, to understand where the market is moving, both internal structure and external structure. So you can see here cleanly that the market was moving to the downside. Then you had the change of character to the upside. Then you had the break of structure to the upside continuation. Then you had the break of structure to the upside. That means the price was moving up. So this was our last break of structure to the upside. Our break of structure to the upside. And this was our protected low, what we can call our swing low. So in this scenario, we had to order blocks, but before that we had to understand where the premium and discount zone are. And as you can see, we had to order blocks, and both in our discount zone. We had the first extreme order block, which was here, the bearish order block, and then we had the second order block, which was just both ways in discount zone. So what was our plan? We had scenario number 1, to wait for the price to come back here, then you look for buying confirmation, then you continue buying, or to wait for the price to come here and we get that buy confirmation to the upside. Or the last scenario was to wait for the price to disrespect. If the price disrespect this last order block, just wait for the break, then retest, then a continuation to the downside. So we had to be patient, and we had to wait for London session to open. So London open came, then we had that tap in this first order block. So we had to go down to 30 minutes. Then you had to wait for the price to break and close above this. That was one of our confirmation here. Then we had to wait patiently, and then we got our confirmation. Then after that, we had to go down to 1 minute, and also the 1 minute we had our shift to the upside. You can clearly see it here. So we had to look for a 5 minutes fair value gap for our entry. Though if you look here, we didn't have that 5 minutes fair value gap. It was only here. It was here. But before we enter this, we had to go back to 1 minute to see liquidity. We had plenty of liquidity, which was here. So we couldn't enter from here because of this liquidity below our entry. So we had to shift to enter from the 1 minute fair value gap, which was here. And you can see it here. That 1 minute fair value gap, that was our entry. And our stop loss was just below this order block where the price reacted. And we had 13 pip stop loss. So we had to target the next swing high, because this was our next swing high. But if you look here closely, we had 1 to 3 risk to reward. So we had to extend our take profit to 6R. Which was there. So we had to wait patiently for the price to come back and tag us in before so we had to wait. The price came, you can see it. We got tagged in, very, very well. Then it was now just a waiting time. We had to wait, and the price just went like that. But the moment the price comes back to your entry and then it goes up, it's already up with 23 pips, right? Then you just move your stop loss to break even. Because sometimes the price can easily come back and take you out after giving you some profits. So it's better you move your stop loss to break even, and then you secure some profits like 10% to 20%, right? Then I had to wait patiently. Then the price went. The moment the price comes out and take out this liquidity, I take out like 70 to 80% of my profits. Then the price just went, and we had a full TP. So before anything, I shared this trade, this outlook and plan early in the morning before even you got into this trade. And you had to understand what really happened before and after. And always patience is the most important thing, and you have to be disciplined in the